at Coach RFX Academy. Today we were going to be talking about the Destiny Company stock. Now, this Destiny Company stock basically we will be looking at how it has actually performed during the years. Now, if you look at it, it started from around where we can see it at around 1968 and all the way it's been rallying to the upside, which is what we would consider as one a good thing. Now, since it's been rallying to the upside, at this area, so I'll have to now begin to make my chart a little bit wide. Now, at this area here, we had what we can clearly consider our break-off structure. So let me label that our BOS. So now, this being the case, on the smaller time frame, which is where we get our entry, we clearly would see that what happened on this particular stock before we had the break of structure. We had a smaller zone here, which was one, our break of structure, you understand, and two, we had market from this particular point B, our point A, we had market rally up to this area here. So we had market rally up to that area and down to this point. So this exactly was what we got on the earlier time of it, and this was around between 209 to 2010. We had a rally on Destiny Company. Now we can now simply pick this. This is actually for the buy. Just using what our strategy would have told us to do, we'll be taking our trade and exiting at this particular point. Now, this being the case, this actual market has been done, and then we had a very big push rallying to the upside. Now, market did all of this move up until when it got to this particular area, this highest point where it got to around $203 basically. So now what we would simply do is we'll now mark that level, which is the highest point, which is $203. Now that is where we'll be anticipating this guy to go, which is the current price at $96 to get to this point. But now that is just one side of it. What do we simply do? We can now go to our tools and understand what is going on the market. So we can see that we have this level as our break of structure. So we have this point as our BOS. You understand? And then we have this area also. So we have this area basically. Sorry for that, guys. So I'm trying to label good. So we have this area as our BOS, which is basically our break of structure. Now, having understood that this is a break of structure and this is a break of structure, ideally you have markets retrace to this area and then you take your shots for a buy, but you can clearly see that this low has been taken out. So if you guys look closely, you can clearly see that this low has been taken out. Now what happened and what made this low to be taken out is what we would now look at. Now on this particular chart, we would also clearly see that there was a low which created this high and made a retracement. We expected this point before the first push to the upside, and all of those happened after this break of structure. This first major retracement was this point, and then that is currently where market is reacting from. That level will be marking it with a red color so that you understand what I'm saying. So now, yes, even if market tapped into that level or tried to tap into that level, we are still just in the same page basically. This is the idea around it. This level, market came close and pushed up, came close again, and it basically pushed up. So now, what we are now to do is to work with the structure market presents to us around here, and then we can now understand what to do in this particular stock. You understand? So now, what are we to clearly do? We would now go to the smaller time frame, which is the weekly time frame. Now, when we get to this weekly time frame, we now want to understand this area here. What are the things we can find out in this area? We can simply find out that market gave us what we would call our liquidity grab. You understand? So market gave us our liquidity grab, and then this particular area of liquidity, we had a break of structure being created here with a bullish candlestick, and after market did that, it dropped down and cleared this liquidity also. You understand? It's like a stop hunt. It cleared it, getting into this area. Now, this some traders will call a head and shoulder pattern. You understand? An inverse head and shoulder pattern, but I'm not here to talk about that inverse head and shoulder pattern. So what we would simply do is, using our Fibonacci, we mark this level and then we mark this particular level. So now this is the next trade we would be taking on this particular market to make significant profits on it. So all we would simply do is we would come here. So this is actually a very significant opportunity for anyone who would want to invest in this stock to make his or her investment and then make some profit off the market. So now this is it basically, and in a little way, between this price and this current price, between, let's say, this price of $83 to this point, I think market will be making, if you subtract it, okay, let's do the subtraction and see what it gives us. Now let's say we purchased this coin at this point when it got into our entry at $88 minus $124. So we will simply come to our calculator and then we'll say $88 minus $124 equal to $36. So when you come down here, you would see between this move to this point, you'll be making $36 if you had purchased it at $88 at this price. Now you are not still wrong because it's a stock. You are not wrong purchasing this particular stock at $96 and exposing yourself to making this much profit between this particular price and this price. And then you can even hold it for a longer period of time and it keeps pushing to the upside. But then this is the ideal point where we as traders will just expect to exit and take maybe 50% of our portfolio depending on how many shares you purchase. So if maybe you purchase 10 units of this particular share, you can take 50%, which is withdrawing. Then you might have been making like thereabout $800 profit on your account. So you could withdraw, which is like maybe 1,800 thereabouts. So you can now withdraw 50% and leave 50% of your equity on the account. You understand? And allow it to run. Now, this being the case, what are we looking out for? What we are clearly looking out for is also the fact that our Fibonacci retracement is from this point to this point also for this whole move, and then that will bring us to, let me just get it down so that you can see what I'm saying. So ideally what we are to do in order to catch this move, all of these structures and everything, we simply mark from that point to this point, and then we would fix our Fibonacci at this so stop loss here, and our final take profit is at this point for this particular entry. So this is what the market has provided for us, and it's a very, very, very important time to make a purchase of this particular destiny company stock, you understand, and hold and make a decent profit. Now bear in mind that this particular stocks don't move overnight. The possibilities they can move overnight is there, but they don't move overnight. They move within. You have to be patient with them. This is something when you invest, you can be hopeful to maybe wait 2 months, 2 years. It can happen in 1 month, 2 months, 3 months. You understand? So it depends. It's basically it's business. The company actually has to run their turnovers and everything in order for you to make profits generally on this particular stock. So this is what we have for the Destiny stock. Have a wonderful day and peace. I would also want to also add to it. Please help me subscribe to my channel in order to grow my audience. I think you all are enjoying this content I'm posting, so do well to subscribe to my channel and click your notification bell icon so that anytime I drop new content like this, you will be one of the first person to get to see and view that particular content and benefit of the information I'll be dropping out there. Have a wonderful and lovely day. Peace.